Good morning. Well, what now? Well, obviously the markets went up yesterday. You look at the chart and you say some of them and just say, big deal. you know, they dropped down, they gapped up, depending on the ones we look at. Some did much better than others, but I mean, we look at the Dow here, and it gapped up and went nowhere. It just ran into what I would call significant resistance. And, wasn't the first time up there. So it came up here, and this made total sense to have a drop after the first test. On the second one, you typically go through it, especially after holding up for several hours. So anyway, it's gapping above here now. So it didn't drop, right? Even though it didn't get through the resistance, it didn't drop. So that was a plus because it had this void below. So now it's trading around this level here, somewhere in here, and close to the next resistance area, which of course says, well, can it get through that one? Well, we don't know. We'll see how it trades here this morning, but we have these reference points, support and resistance relatively close together here. So, it leads me to think that any initial move at the open might be short-lived, or it might be whippy. If it pushes higher, it's going to hit here, and I guess there'll be some sellers because that gap up is a big gap. And so whether the futures, you see a big green bar, it ran up there, and now it gaps up, and it would just make sense for there to be some selling. The way prices came down here with these big gaps and wide range bars, this range expansion here, it's historically, it's more alignment with a market that is marking a top or uncertainty. And we already talked about the wrong way option traders buying a tremendous amount of calls and so on. But so we'll just have to see how this unfolds. But yesterday was a big up day, right? Saying, okay, the market was up whatever 400 or 500 points, and you look at the Dow and it's like really nothing much went on here. It gapped up and went nowhere. So now it's gapping up, and we'll see how it unfolds. Spiders got further, right? It got through this resistance area, and now it's gapping up right up into the top over here. So my inclination is to short this up here. We'll give it a little bit of time since it's just going sideways here. But one of the things that would give a signal would be if it did open higher here this morning and immediately got slammed back down. So that's something that I'll be looking for, a breakout failure. And then, the same story is like, okay, here's that situation that could be a shortable event. However, where's the next reference point? Well, it's not that far away. So it's not like we have a price structure here as we're looking at it to say there's a great opportunity here today, for prices to move one way or the other. Now, of course, let's see here, 322. It's right up here at the highs. I guess a good yeah, I'm going to get to ES, Paul. A good thing would be, hey, it makes new all-time highs. And that was 2 weeks ago, one of the scenarios I wrote about. I didn't think, honestly, after, this week, earlier with the big down bar, it didn't seem that, hey, that new high and then making a top was in the cards here. It was more about it doing it ahead of that. But hey, it's kind of like that football game. San Francisco 10 points ahead, not much left, and they blow it, So anything's possible. And that's why you have to have two scenarios. So maybe a new all-time high, and it starts to come in, and that's all part of this wide whippy pattern that's going on here right now. Qs, new all-time high. That was the star yesterday. You know, the NASDAQ stocks, you know, continuing to perform. Even Apple, where the markets were initially going up in the first, I guess, 20, 30 minutes or so, and it was inching down. Buyers there just had to say, nope, we can't sell. And they came in and they pushed it up a bit. It underperformed, even in the face of, you know, Google, you know, gapping down. Here's the, you know, new all-time highs. And now for the bears, well, ultimately, you know, this moving up a bit higher here, a reversal back down, some kind of a failure here, that I think would, you know, kind of the expression, put a fork in it, it's done. We'll see. If it hangs up here into the end of the week, I mean, there's no doubt that's bullish. So we'll see how it unfolds. All right. The Russell, we all know, got clobbered, led the way down, and now it's gapping up close to this resistance area, but it's not all the way up there. So again, the market could open up and run a bit higher before different markets hit some respective resistance areas. So again, leading me to believe that today may not be a big movement day. And since it's Wednesday, could be a really good day for SPX 0 days to expiration trades. So we'll see. The transports, you know, another crack in what's going on there, you know, so that big move down, that's a problem. And do I have it on this chart here? No, I don't. I have it on something else. Hold on a second. What time is it? I got a little time. Hold on. Let's see if I can show you. Is it on this page? No, it's on this page. I think it's on this page. So, well, on Monday, I spoke about the fact that this yield curve here, the shortest, the 3-month against the 5-year inverted. And it was like, what is this whole thought about this virus and so on, the economy slowing down? You know, all of a sudden China says everything's okay. And as I mentioned yesterday, one of our clients emailed me to say it's a freaking disaster there. And we'll see in a few days. But anyway, this one inverted. The 3 versus the 10-year was right on the edge of going through the 0 line. So we'll keep an eye on these things. If this can get back above here, well, maybe this correction is just, you know, some sideways chop. But, you know, as I was talking yesterday, big trending moves like we saw in the end of last year do not occur from wild whippy patterns like this. Futures. Right? So you can see the no gap, and it was just a big green bar. Looks much more impressive than a gap up that goes nowhere. I'll look, Paul. We'll look. So this is up near the prior high. So we want to be above here, right? So going to SPX, all right, first thing we let it do, right, is obviously let it. It's going to gap up even if we go to sleep, right? Not let it up. So this doesn't even show us what it is, but we know it's up in this area. So if we were to get a 5-minute breakout bar failure, maybe we can go, you know, a little tight, but let's take a look at it, 33.60 or above as the lower strike. So again, we'll have to assess that. And, you know, clearly we don't really have a reference point, a good reference point, maybe 32.60 on the downside. You know, and then we look at the premiums, but we don't have any clear support points here. So let's, so we know we're up around here, right? So give or take. I mean, we may even be able to go below here. And we'll assess it as, you know, the market opens and watch how it trades. And so one of the positive things about yesterday was that the markets basically went nowhere right after the gap up, right? Just trading sideways, which, you know, what I was showing you before was, you know, on the other charts, you know, it left a base, right? This consolidation. And, I was mentioning to Dan yesterday, because this Tesla was, was pretty incredible until after the close or near the end where it just got crushed, relatively speaking. That gap up was huge, right? And it opened up here. But at the end of the prior day, it was going sideways quite a bit. And we look showing on the 5-minute chart, if I can do it over here. Right here. So there was this lot of sideways chop there. So, when this bar didn't follow through to the downside, that was obviously a little bit of a problem. Looking for the gap fill, and then it created this support point when it did that. But when you're looking at something that's gapping like this, man, that was a wide range bar. So one of the concepts in the gap course with gaps is, well, here it's a wide range bar. Fine. Well, look inside of the wide range bar. See how it formed. And the big move came early in the day, and then it went sideways for hours, which, hey, a big gap like this in this kind of run, it could have collapsed. But just generally, when we look at gapping concepts, to fade a gap, primarily, this was perfect on the daily, but what we want is to change this structure as to it was going sideways in the morning, and it ran climactically in the end of the day, and then it gapped up. I'll just keep that in mind. Somebody might want to take a peek at that gap course because it's pretty awesome. And let's continue here. All right, new all-time highs. Now futures, you can see they're flip-flopping around here prior to the open. And they're obviously, we're not sure exactly what will happen, but historically, these things, if they're going to come in, they pop up pretty quick and they get nailed right back down again. Kind of what I call, the futures there, a gotcha trade, because it sets up the unexpected, and you can, this bottoming kind of pattern, and it just pokes up and almost immediately gets nailed right back to the downside. So this was the best performer yesterday, which has the void below and has the most traders in there long expecting this to go higher. So if we were to get that kind of gotcha trade, that shocker, this is the one I think that has the potential to drop the most, or at least without even damaging this chart. It still could have a decent pullback. So we'll look at that. YM, sideways price action. It's up near this resistance. Somewhat similar. Maybe the NASDAQ leads up and fails. The Dow is underperforming, right? It doesn't, and it breaks down under here, right? Hit the bid. It's got room to drop. Russell, kind of similar, right? Sideways. Now, I'm looking at this a little bit from the bearish side, but, because the upside and some of these, it's not that great. But look, if it gets above here and it can hold, I mean, we just got to go with until it fails. It's just the way it is. We'll see. Oil bouncing off the bottom of the range, top of the range, bottom of the range. Right now it's stabilizing here, trying to turn around. And what did I read there? Oil jumps on reports of effective coronavirus drug. What's that got to do with anything? I don't know. Bonds coming in. I know, but bonds coming in a bit. So market, going up, bonds coming down, bonds are coming. I know this should be green. Bonds are coming down to support, which is in alignment with the idea of maybe the markets popping at the open and then coming back in again. Because when bonds come down to this level, just like anything else would look like this, yes, it's a deep retracement from this consolidation and back down again. And if you were in the presentation I did yesterday, I covered stuff like this, like how long did it take? Did it get down there fast? Did it get down there slow? There's a little bit of a bearish retracement down nonetheless. there's going to be buyers down here. And if buyers step up here in some force, right, to get this turning up, well, very likely this is going to start coming down, right? Because that's just the inverse relationship that's been going on. So you can keep that in mind. And gold is up here a bit. It's just kind of waiting here, you know, kind of market made that rally. Gold came in, and that's kind of inverse relationship that's been going on too. It's on some support. So if the market should start to pull back, gold probably starts moving up, but kind of got whippy pattern going on there. And silver, it's been whippy right along. It's kind of a mess. So basically stay away for now. And I gotta look at the transports. Yeah, they're back down here. I said we need to hold them at the bottom of the range, and if they can't, well, that opens up the door to going back down again. So there it is. I think the first few minutes or so, we watch to see if they can markets can actually move above these bases that they've created here overnight. Watch for breakout failures and so on. So that's what we'll do at the open. So that's it. All yours, Dan.
All right.
Dan, someone's asking. So I saw an Apple credit spread on our trades, but now no sign of it. No cancel trade exit. Just if you're in Telegram, Dan posts everything in Telegram to update subscribers and in the trade sheet.
Yeah, I had a tight stop on it yesterday. So we did it in here when it was cracking this, base right here. And I kept a tighter stop. I would have to go to a 5-minute. Well, we don't have time for that, but it stopped out. I had a tighter stop in here somewhere. And so we stopped out, and I don't send text alerts if it doesn't convey any new information, because then I'm just going to clog your Telegram up. So you got the new trade idea, and it stopped out, and that's posted in the trade sheets.
Right. So Dan is saying is if he's posted a stop and it gets hit, well, that's just a fact. So there's nothing to post in Telegram, but it will be updated in the closed trades in the member area.
Right. In the same way, if I give you the instructions to, hey, short a call spread on, Tesla under, 889, I don't send out an alert that said it hit. It doesn't convey any new information. All right, let's continue here. All our opens seem fine. We do have a Tesla call spread. We got stopped out of an early one yesterday on the 5-minute crack. And that's just a function of how aggressive you are on the smaller time frames getting in. But we did another one, and that one's now very profitable. And I'll actually look to we're gapping under yesterday's low now. So that's actually, well, we're gapping right to the low, but regardless, it's a bearish gap, bearish topping tail, climactic sell setup. Volatility is still off the chart high. It's kind of extended now. I'll be looking for a bounce, maybe to do another call spread for next week. Just looking at opens here, if there's anything else to comment on. XLU we mentioned was weak yesterday. SO is on my short watch list. AEP, short watch list. All these just climactics. We have an Alta put spread, gapping up a little bit, expires Friday. Yeah, everything's fine. So let's just go right to gappers. Newer, it's a nasty gap, but it's big. It's gapping down, 10%. So let's see about shorting that on a bounce. Merck here, yeah, I saw it just tanking pre-market, 84.75. That's a nasty gap. I don't know about the target, and it's oversold pre-market. When I trade gappers, I like using the pre-market pattern as part of my decision making, and this had a fluid sell-off as opposed to a bearish gap and just going sideways then that would be a better short under the low. MYO, my gosh, look at this. Look at that range yesterday, $7 to 35. That is insanity. But now it's a gap up, and it's, believe it or not, this is, even though, well, it's not my style, but it's capping up here to 29 bucks. No, look at the intraday, Dan Half. If you could put your drop down to all panelists and attendees. No, it's not a bad tick. Look, that's what the intraday does. It's a microscope. That's very real. Totally not my style, to trade a $29, big old gap like this, but that's a bullish 15-minute setup, believe it or not. Gapped above resistance, going sideways, wide range igniting. That's a 1, 2, 3. That's crazy pattern there. KO McGraw, you gave me this one to watch. I like the little downside shakeout. So that was a breakdown and bottoming tail. Nice close. So that's worthy of a watch. Macy's closing 125 stores, no pattern. Party City, beautiful breakout yesterday with a downside shakeout. That's a little reverse heading shoulder, left shoulder, head, 100% retracement, right shoulder. Look, you got a beautiful 1, 2, 3 right there. So today's Wednesday. So Monday had a nice little entry on Party City. 85 bucks, gap into resistance, IPHI. I'm just deleting you because that's what I do pre-market, trying to get rid of the lower probability setups. 58 bucks. That's a mess. PLT getting whacked under 19 bucks. Wow, that's pain when you gotta blow up your monthly chart. So it's gapping down to here. That's painful. That has room to fall, but we don't short things gapping like that. There's the newer we looked at, T2, 121 and change. So that's a bearish gap. McGraw, no-brainer call spread candidate. If we can get juice up here, I'll put that in a little window. It had earnings, so volatility should be high. M-chip 105.50. Bullish gap, but it got shellacked. It's a counter trend move. No price void. You're gone. Greg's Coffee Shop, Lima Kilo, 39 bucks. Yeah, I mean, it's strong. He had a bottoming tail. That would have been a good put spread. Yesterday would have been a good put spread at the $30 level. No great pattern now. Snap actually had a bullish close. It's kind of a bull flag. This flagpole here. One of you asked about the angle of the flagpole. And ideally, they are more vertical. So this one's a little bit, the angle's a little bit lower. But here, this is still, if you draw trend lines here and here, this is your trading range, consolidation and an uptrend into the gap fill, rising 20. So that was a bullish close, but it had earnings gapping down to 18. Now it's a bearish gap under the week's low. No, it's not. It's Alex, we've talked about it before. I don't have time. It's just part of the definition of a flag. It's a channel, and that's what the trend line is doing. It's just defining the channel of the retracement. All right, so this actually could be a call spread candidate under a 30-minute low. Clack, gapping down 176, no pattern. I'm getting rid of you. Match 81 bucks. Small gap down, rallying here. Yeah, I read in the journal that they're doing well on their Tinder. They own Tinder. Tinder app is making them some money. Disney here had earnings. Wow, that was a powerful retracement off the low. No pattern for me though. You're gone. CERN 70 is a bullish gap, but I don't trade gaps that, you know, after a huge run like that. You're gone. We have 1 minute to go or less. Guild 66, that's a bearish gap. So that could be a call spread candidate. UNM 28 bucks, garbage, Pru, garbage, FISV. If it holds here, if it holds, you know, it's a breakout failure, but if it holds, possible put spread candidate. Wow, that's a big old gap, but too big for me. Allstate, it's been in a power trend. It's extended. AFLAC, garbage. YRCW, no pattern. PAA. Put spread candidate, you know, climactic buy setup, gap up.